Yeah, good morning, everyone. So, welcome to our morning call. So, more of a market remain range bound in the US. Uh, Nothing great up or move, and even the futures are also more of a flattish. Asian market are also not giving any major directions. They are also some are up by less than 1%, and some are down by less than 1%. So overall indication from the international market is mixed bag, nothing so great. In fact, tomorrow is the CPI data in the US, and that will be watched very carefully. Uh, and that will even decide the directions for the Fed as well. So need to be careful ahead of the event. Overall directions seems here we saw a good bounce back yesterday. So we may see some more continuation of that in today's trade. So outlook for Indian market remain bit positive. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. This is Swati. Yes, today the market is likely to open on a positive note and we're likely to witness some range bound trading sessions. The reason has been specified by the sir. On the technical front, the resistance is placed at 22,170. Any more above that level, we expect a positive momentum to be carried forward towards 22,240 to 22,300 levels. Where on high side as on the low side, the support is placed at 21,940, 21,870. The view is bit range bound to cautious. This pullback rally may be a short lived and which will be continued towards 22,342, 22,400, a strong resistance provided by short term moving average. So any pullback rally can be utilized to book your profits on every highs. Coming towards the bank nifty, yesterday we have seen almost 800 points pullback rally into the bank nifty, managed to maintain a positive closing above if nearby its 48,000 psychological mark on the future basis, which gives us some sort of a relief sign. Going ahead, 48,300 would be the first resistance level. Any more above that level, we'll expect to continue to this pullback rally towards 48,640, 48,800 levels. On the flip side, the support is placed at around 47,440. Below that level, 46,870 can be seen. Coming towards the Fin Nifty, 21,490, 21,620 are the crucial resistance level we need to keep eye on it, whereas the support is placed at around 21,130, 20,900 level. Stock specific, ICICI Prudential looks good on the technical front. We believe that the stock is likely to carry this pullback rally towards 615, 620 levels. So one can take a long positions at the CMP by maintaining a strict stop loss above 580. That's it from my end. I request Niro to take a call forward.
Yeah, thank you, Swati. On the derivative front, the overall data is still positive. As I said yesterday, Shri, the data still is positive, but that doesn't mean there will be a one-way rally. There is likelihood that Nifty will move in either direction. Yesterday, we did take good support around that 21,900 odd levels and moved forward from there. So now 22,300, 22,350 can be a good resistance area, and probably from here you will see some consolidation going in. Broadly, Nifty should remain range bound in between 21,900 and about 22,350 odd levels in the next few days, so look out for the same. The VIX continues to rise and it is likely to rise above that 25 odd levels as the election result approaches. From the stock specific front, we expect the IT sector to do well. We believe IT sector as a whole should continue to witness good buying action. As a whole, we are seeing good buying in defensive stocks, defensive sectors like IT, pharma, and FMCG. That trend should continue in the next few days. So yeah, look out for the same. That's it from my side. I'd like to ask the fundamental team to take over.
Good morning. Shriram Finance has approved sale of 86% stake in its housing finance subsidiary, Shriram Housing Finance, to Orbak Pincus for a sum of 4,600 crores. Stake sale will increase the company's book value by around 4%. So that's positive for Shriram Finance. On the result side, Karur Vysya Bank result is below expectation if we adjust for the abnormally higher other income. And also the increase in OPEX and credit cost hurt the profits. Advances growth was muted at 2.6% sequential and 14% YOY. OPEX grew by 11% sequentially and 37% year on year. And also credit cost increased from 80 basis points in December quarter to 160 basis points in March quarter. Thus, adjusted profits declined on both QOQ as well as YOY basis. That's why we are neutral on the stock in the near term. Aditya Birla Capital result has improved on the back of strong performance from NBFC, life insurance, general insurance, and stockbroking, while performance from asset management company and housing finance was muted. So, company also booked 486 crores of profit in terms of gain on sale of shares of Aditya Birla Sun Life Mutual Fund to comply with the 75% promoter holding norm in that entity. So if we remove that amount, then the profit before tax would have been at around 1126 crores, which increased by 7% sequentially and 35% year on year. So decent performance. On segment wise profitability, NBFC profits grew 4% sequentially, 30% year on year. Life insurance profits grew 32% year on year. General insurance profits almost doubled on a low base. Health insurance showcased a turnaround this quarter. While profits in the asset management grew by just 2% sequentially, which is below the industry average growth. And also housing finance witnessed slight decline. Overall performance was good after many quarters, and we turned positive on Aditya Birla Capital. Thank you.
Good morning. Aarti Industries Limited hosted the con call yesterday. If you look at the results were broadly in line with expectations. Though during the quarter, there was a shortage of nitric acid that partially affected the volume growth. And the same is expected to continue in FY25 to an extent. Agrochemicals were under pressure in terms of volumes. There, the management is expecting recovery in second half of the financial year. Also, there is some expansion which is expected to commission in Q2 and Q3, which will drive the volumes for the segment. Overall, in the segments, the company has performed well in the discretionary segment. Also, the company has received an order of long-term contracts worth rupees 3,000 crore, which is spread over 9 years. And during FY24, it has achieved rupees 100 crore of revenue against the guidance of rupees 200 crore of revenue. The management has guided for FY25 capex worth rupees 15 to 1800 crore, and EBITDA margin guidance for chlorotoluene is in the range of 25%. The company is expecting the volume growth of 20 to 30%, backed by a ramp up in existing as well as commissioning of new units. The stock is trading at 26 times to FY26 EPS, and our outlook is neutral on the stock. UPL posted results above expectations. Revenue degrew by 15% on a YY basis. It has continued to witness a decline in prices with higher cost inventory, and destocking continues in key markets such as Europe and North America. This has impacted the top line performance. EBITDA margin reported at 13.7% versus the expectation of 10.3%. Here, the margins could improve due to the impact of price decline, which was mainly offset by input cost tailwinds and improved product mix. The share of higher margins, sustainable and differentiated product in CPC revenue has increased from 29% to 36% in Q4 FY24. In the con call, the management focused on the parameters such as cost reduction, reduction in working capital, and margin expansion. This will help them to generate the free cash flow, which will be further used to reduce the debt by $300 million. And if we look at the net debt to EBITDA ratio, it stood at 5.2 times in FY24, which is expected to improve in FY25, and it is one of the key monitorable. The management is positive on the volume growth from new product launches, and it will focus on high margin products with improved product mix. Also, it expects to sell closer to the consumption cycle to improve the working capital cycle. The stock is trading at a PE of 13 times to FY26 EPS, and we expect limited upside from the stock at this valuation. Thank you.
Yeah, apart from this, there are some more results. Inox India, that is mainly into cryogenic cylinders and liquid natural gas cylinders. They had reported the results, and results were a bit declining. The revenue grew by 17% year on year, but declined by 5% quarter on quarter. And EBITDA margin has also come lower at 19.3% versus last quarter 23%. But what the management has indicated in the con call is that they are likely to grow at 20-25%, and the sustainable margins are anywhere between 21 to 25%. And the reason for decline in this quarter margin was some extraordinary expenses in other expenses, which has resulted into lower margin that is likely to bounce back in the coming period. So overall outlook, what the management has given is positive. Stock is trading somewhere at around the 39 time FY24 26 earning, which leave limited scope for upside from here. So any decline in the price is good reason to buy the stock, as the outlook for the industry and the company is a growth of around 20% CAGR for next three years is sustainable. So outlook is positive for the company. Apart from that, Jindal Steel and Power has reported the numbers. The numbers were broadly in line with expectations, though EBITDA per ton were a bit lower, but higher volume has compensated a decline in EBITDA per ton. Company had around $20 higher cost for the coking coal in this quarter. But that is again likely to come down to $30 to $40 in the coming period. Realization corrected by around 5% in Q4, but that is again likely to move up in the Q1 as the prices are strengthening. So company will be benefiting from increase in the prices of the steel and also decline in the cost of coking coal in the coming quarter. So overall outlook from this perspective is positive. And apart from that, the biggest part of the company is that the expansion is expected to come online in the next 2 years. And part of that will start in the current year itself. So company has a production of around 1.8 to 2 million ton of sales in every quarter. So in the year, company is expecting higher production by around 3 to 3.5 million ton because of the start of one of the expansion. And next year, the production can increase by 7 million ton. So almost the company is likely to increase the production from somewhere at around 8 million, 7.5 to 8 million to almost at around 13 million ton in next 2 years. So increasing volume and positive dynamics for the steel sector act as positive for Jindal Steel and Power. Share is somewhere trading at around 6 times EV by EBITDA 26 earnings. So there is some scope for the price to move up from here as well. DLF has reported the numbers. If you see the financials, that is sales and profitability, that all looks ahead of expectations. But the new booking has come quite low, and we need to watch the new bookings for the company to see the performance. The new booking has come at 1,460 crores as against 9,000 in the last quarter and 8,500 in the last year same quarter. On an average, in a normal quarter, company used to do 2000 plus of booking, but this time it has come lower. Maybe because of company had a very high booking in the previous quarter and maybe short of inventory. That could be the reason. But if you see the booking in this quarter is lowest in last 10 quarters. So as such, if the reasons for the forthcoming quarter is not so sustainable, then the result becomes bit negative. This booking figure can have some impact on the share price of the DLF. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. In gold, prices are supportive, testing the support area at 71,800 to 71,700. So buying around these ranges recommended, and on upside, it can test 70 to 100 to 200, whereby profit taking is advisable. Also, one can initiate a sell around 70 to 200 with a stop loss of 70 to 450. Prices are expected to consolidate. Silver, however, looks positive, and as long as prices are sustaining above 84,800, we are expecting prices to test 85,800 on the upside. If prices are sustaining above 85,800, then we may see further buying in the white metal. Whereas prices are supportive on the downside at 84,400 to 84,100 zone. In metal, copper, we are expecting prices to test 890 to 93 on upside. So buying around 883 is recommended with a stop loss of 878. In zinc, one can buy around 263 to 6250 and maintain a stop loss of 261. On upside, again, it can test 266. Crude oil prices are supportive at 6500 zone. So buying around 6600 to 6580 is recommended with a stop loss below 6500. On upside, again, it can test 6700. And natural gas, we are expecting prices to test 200, 205 level. So buying around 193 is recommended with a stop loss of 185. That's it from us. Thank you very much.